Now let's talk about slippage. All right, I want to start by giving a bit of context first, and then I'll explain like what slippage actually is. All right, so if we look at the order book for ton or ton, Ton, the best sell price is at 2.7680 something, right? Because it's always changing. And we can see here the sum USDT, it's fluctuating somewhere between like 3K and it goes up to 10 sometimes, right? And then for the best buy, the sum of USDT, it's fluctuating pretty much at the same similar size, somewhere between 5 to 10K. So what does that mean? This means that if I was to market buy about less than 10K, or like let's say less than 1K, the price that I'm going to get for my average entry is just going to be whatever the best sell price is, right? And the same goes for the limit buys. So if I was to market sell or open a short with a market order, and the size, like the position size that I'm using is, let's say, 1,000 USD, the price that I'm going to get is just whatever the best buy price is. And the reason for that is because the size of how much I'm trying to trade with, it is less than the total amount that's available. If I exceed that, so let's say instead of me selling $1,000 worth, but instead I sell, let's say, $50,000 worth, what's going to happen is that I'm actually, like, my order alone is going to eat through all of the available supply up until I have $50,000 worth of ton sold. So if I look here at the sum USDT, I'll be able to see up until when is my order going to hit. So I'm going to, if I look here, I can see that the 50Ks, it starts fluctuating somewhere around here, 2.76 or wherever this number is, right? But basically, I'm going to eat through all of the supply up until somewhere around this point. So every limit buy from 2.762 all the way down to somewhere in here, I'm going to eat all of that. If I'm going to be taking literally all of this, it means that my average entry price is going to be somewhere over here, not actually up here. So yes, it might show that the best buy price is 2.75, right? But my actual entry price is going to be somewhere a little bit worse, right? So what slippage is the price that you wanted to get. Let me just draw it on the chart, 1 second. Let's say I have a stop loss somewhere here, right? And let's say I'm already long. If my stop loss gets triggered at this blue line, which is, actually I might use a different line just so I can see what the price is. It's going to be 2.7534, right? So this is what price I would like to get out at for a loss if my idea is wrong. But if my position size is really enormous, right, like 500,000 or some like very large number, what I will find is that there's actually not going to be $500,000 of orders just conveniently sitting at this specific price for me. So what's going to happen is my order is going to eat through all of the limit buys up until I get 500K filled. And what might happen is my order alone might actually push the price down to 2.74, right? I'm just using a hypothetical example, so just bear with me. And my average price that I got for that one order, it might actually be somewhere here. So 2.7464. So whatever that gap is, let me find where can I measure? I think I'm going to have to, yeah, there we go, got it. If I hold shift and I click at the same time, I can pull this little measurement tool up. So yeah, my average slippage, like my slippage on that trade is going to be 0.24%, right? So not only do we have to be mindful of what are the trading fees that we are paying, like the 0.02% maker and the 0.06 taker, but there's also the cost of slippage. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include like total combined within these two guides, there's more than 75 trade screenshots for you to study, like through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Like literally in the journal, there's a tab called educational resources. And in there, I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.